Hi there, welcome to Kneppy Invests. Another trading week come and gone. And to be fair with you, I love weekdays simply because they are trading days. I hate holidays, unless I'm working because I get pretty big pay when I'm working on holidays. And my least favorite time of the year is between about Christmas and just after New Year's because there are so many public holidays during that period and so little trading happening. I am sad, very sad that I think that. I'm not the biggest fan of weekends unless I'm working. And thankfully, I am working this weekend. I'm working Saturday and Sunday because we get paid a lot of money to work weekends because we are sacrificing doing interesting stuff on weekends. But for me, the most interesting stuff is during the week, on weekdays when there is trading happening. So anyway, I'm going to do a bit of a portfolio and technical update. So look at the performance of 3 of my portfolios and also look at about 20 charts of companies. Most of these companies I do own, but I will look at some other interesting charts for other companies. Now, I do have 3 portfolios, and sometimes I will update on the group portfolio performance, but I won't do this or do that in this video. Now onto my long-term portfolio. And so this portfolio consists of high-quality companies that I just want to own for the long term. I don't really want to sell these. The only reason I might sell some of these companies is either I believe it doesn't belong in this portfolio anymore, so I might actually transfer it to my medium-term portfolio, or I think the thematic or the reason why I bought into the company has gone. And that's why I actually sold out of A2 Milk a few weeks ago because one of the reasons I bought in is gone, and I don't fully trust management just now because of their obsession with China. I think I've talked about that in a previous video. So what I do in ShareSite is I track the performance of my portfolios to a benchmark, and the benchmark is the STW, which is an ETF that tracks the ASX 200. This also provides dividends to their shareholders. And the reason I want to track this particular benchmark is because if I can't beat the benchmark, I probably should just buy the STW and do other stuff. I'm not sure what I would do because I just love trading. But anyway, so at this point in time, the long-term portfolio, which does consist of high-quality companies, is outperforming the benchmark by a fair bit. Now, because I do own international companies or companies that are traded on overseas exchanges, there is a currency gain or loss at this point in time because since the start of the financial year, the Australian dollar has gone down. There is a currency gain, but I also have a capital gain that is beating the STW. Also dividends, some dividends, nice dividends are coming in. And overall, the long-term portfolio is up 4.26% compared to the benchmark, which is only up 2.47%. Although it was a good week for the XGO. We have a look at the XGO in a second when we turn our attentions to charts, but the benchmark was up a fair bit from last week. Now on to the best performing companies. Now, someone did ask me, should I be showing monetary gains or percentage gains? And it took me about 20 minutes to find that you can switch between the two up here. And it's just weird that it took me so long to find it. Anyway, so I'm going to focus on the percentage gains for my holdings because some of my holdings are larger than others. So probably percentage gain is the best way to decide which is the best performing company. So monetary gain, the best performing company is Nick Scali. And actually percentage gain is Nick Scali as well. So Nick Scali up 31%, PWR Holdings up 29.8%, then Domino's Pizza up 15.7%, and Breville up 15.1%. And all these companies are providing a dividend, nice dividend yield for Bailador, 3.92%. Probably will not consider Bailador as a high quality company, but I just like the management of them. They are it's a listed invested company that primarily invests in unlisted companies. And sometimes the companies they list in do IPO on the ASX, including Straker, and the most recent one was SiteMinder. Those are 2 companies that Bailador invested in, and then they've listed since on the ASX. Worst performing company is ResMed. Share price keeps dropping, and then WiseTech. Best performing company overall is actually not on the ASX. In fact, it's Google, up 19.2%, and then Adobe just behind that at 16.6%. And funnily enough, probably one of the worst performing companies in my portfolio is Volkswagen, down 10%, and also Apple, down 6.3%. Didn't realize Apple's share price had fallen a fair bit, but yeah, it's lower than when I bought into it. So otherwise, very happy with the performance of this portfolio. The very fact that it is beating the benchmark, that's exactly what I wanted to do. In fact, I fully expect this portfolio to significantly beat the benchmark. And the main reason behind that is because the benchmark, the STW, is the ASX 200. And a lot of the bigger companies on the ASX are low-quality companies, like the banks. Yes, I do consider banks to be low quality. But I even consider Woolworths to be low quality. Coles, BHP, Rio Tinto, they're all low-quality companies. The main reason I consider mining companies to be low quality is because of the cycle nature of those businesses, and I only trade those companies. I would never hold mining companies for the long term. When I say long term, I'm talking about 5-10 years. So my hope is to hold some of these companies for over 10 years. Now onto my second of the portfolios, and this is the medium-term portfolio. And this particular portfolio, which is probably my largest portfolio, consists of companies that I think could become high-quality companies in the future. Not all of these companies I would think have the possibility to become high-quality companies. A lot of these companies I took a position just as a trading position, and then I've just held on to them because the share price keeps on rising. And some of these companies are actually giving me some pretty nice dividends, including Duratec, which went ex-dividend today. So overall, the performance of this portfolio is up 6.39% compared to the benchmark, which is only up 2.47%. So we are not quite tripling the benchmark, but definitely on the right path. Now, our best performing company in this portfolio is Energy One. However, I should have, and I'm going to do it right now, because I have sold Energy One a few weeks ago at $2.65. So what I'm going to do, I'll just show you what you do in Energy One. Sell, I can't remember when I sold it. I'll say Friday, the 1st of September. And I totally forget how many shares I own, 450. And I sold it at $2. What was it? $5.65. I know exactly what I sold it at because I put the bid in. Brokerage, $5 because it's through Superhero, I believe. Okay, now this is updated. So the performance of this portfolio should have changed now. So let's have a look. So originally up 6.39%. Now we'll just do the refresh button. Up 6.47%. So a slight increase in the performance of this portfolio because I did sell Energy One at a slightly higher price than it is now. But still up 92.5% since the start of the financial year. The second best performing company is EML Payments. And then we have Doug and Syrah Ordinate, Playside Studios, Johns Lyng Group, Chryso Corporation. In terms of dollar gained or best performing companies in terms of dollars, we have Doug, Johns Lyng, NG1, Ordinate, IPD Group, and Chrysos Corp. And the reason why IPD Group might be not percentage-wise, it's way down the list in terms of percentage-wise. There it is, way down the list, only 12.6%, because it is actually one of my, if not the largest holding I have, because it is at this point in time almost a 4-bagger for me. Maybe not a 4-bagger, at least a 3-bagger. So in terms of percentage gains, well down the list, but in terms of dollar gains, well up the list. Worst performing companies in this particular portfolio, Ventura Health, Xtech, LGI, Frontier Digital, SciDev. But in terms of dollar gains, even percentage gains, nowhere near as bad as my best performing companies. And that's the way it should work if you have a really good diversified approach. And even though I do expect quite a few of these companies to become multi-baggers and possibly even high quality companies in the future, some of these companies won't. And that's why I take a diversified approach, because sometimes it is hard to know which companies will become the best companies in the future. And that's why a diversified approach can work. So I do have quite a few holdings in this portfolio, and most of them are performing quite well at this point in time. And some are giving dividends. Duratec gave me a really nice dividend. So where's Duratec? 3.8% dividend yield. Bell Financial 4.6%. Prime Financial 5.71% dividend yield. Sequoia, 10.7% dividend yield. So some of these financial companies are giving me really nice dividend yields. And more than likely, I won't sell out of most of those companies. Anyway, on to my short-term portfolio. Now, one of the reasons I started tracking the performance of these portfolios in ShareSite is because I renewed my ShareSite a few weeks after I said I don't want to pay any more. And then they said, we'll give you a discount. And I've just noticed that ShareSite is up for renewal within a week. So I have to make another decision whether I should renew ShareSite. I should actually ask ShareSite if they can give me a discount if I plug them, because I actually do use them quite a bit. Now onto my short-term portfolio, and this is up 11.5% compared to the benchmark 2.47. So we are talking about a 4 to 5-fold better performance than the benchmark. Nice capital gain. This portfolio is giving me dividends as well. I did not expect that. When I was thinking about the potential performance of this portfolio, I did not expect dividends. Now, one company did give me some really good dividends in the week. Step One gave me a 5-cent dividend. Then the share price fell 15 cents. This just shows you that some investors on the ASX are irrational. Why would you sell a company down 15 cents because the company just gave you a 5-cent dividend? The capital loss far exceeds the dividend. It just shows you how obsessed people are with dividends, that a company that gave a 5-cent dividend was down at 1.15 cents. And that's on the day, maybe it was the next day. Ridiculous. Anyway, step one, 13.5% dividend yield. I suppose there are questions whether the company can maintain that dividend moving forward. And one of the reasons the company gave that dividend was because of their trust and faith the performance of that company will continue in the next few financial years. But I'm not buying step one for the future. It was just a trade. So the best performing companies are companies I've already sold. Bravura, which is actually up 10 cents since I sold, 35%. Nuix, 31%. Megaport, 26%. Step one, 20.7%. So maybe I should just take my profits with step one, because that is up. So I am aiming 30 to 40% gains, but I will take 20.7%. Worst performing companies, Integrated Research, which I still hold, down 21.3%. And the main reason I'm still holding Integrated Research is I don't think it could get much cheaper, because the financial performance of that company wasn't that bad in the last financial year, and there is signs that things are turning positive for that company. I'm not sure why there was anyone selling that, because on open, when they did release their financial year results, share price actually rose, and then all of a sudden selling came in. But it does look like, based off the selling patterns, there is someone big selling out of Integrated Research. So I'm willing to hold that on the hope that it will increase in price over the next few months. So overall, very happy with the performance of the short-term portfolio. No trades in any of my portfolios, except I did take a very small position in Atlas Pearl. And when I say very small, I'm talking about $1,000. So I don't know. The only reason I took a position in that company is because it looked really, really, really ridiculously cheap. But that does make me wary. Now on to technicals. Now first, we'll have a look at some of the companies that are in my short-term portfolio. Have a look at Australian Ethical Fund. So that is the only company I've taken a position in the last 2 weeks, and just because of the chart looks pretty good now. And today, on Friday, the 15th of September, share price of Australian Ethical Funds rose almost 9%. A beautiful looking chart. We did see a little share price pullback after a nice little run. So we've seen the share price go up and down in waves. But the main thing is the highs are higher than previous highs, and the lows are higher than previous lows. So we're getting higher highs and higher lows. That is the definition of an uptrend. The last time the share price was this high for Australian Ethical Funds was back in 2023. So it's on about a 9 to 10 month high in this company's share price. Now, I would never put my money in Australian Ethical Funds, but I am not the target investor. Their target investors would be probably millennials and Gen Zs, that sort of thing, those younger people who just see the word ethical and think, oh, this is a great fund to invest in because they're ethical, even though I probably would argue against that. Otherwise, Australian Broadband, this is a company I own in my short-term and medium-term portfolios. It's either in my medium-term or it could be my long-term eventually. Definitely a potential high-quality company. And the main reason I took a short-term position in this is because the share price is breaking out. There was a little pullback in the share price. So the share price went below the breakout price, but it wasn't very long below that price. And the share price has shot up again. I'd like to see the share price get above the previous highs we saw back on the 31st of August, and it almost did that. Share price up 4.8% today. Hub, another company I took a position in just because the share price broke out, classic breakout when they did release their results. And the share price keeps on climbing. And this is a classic breakout chart. You don't have to take a position on the day. You can just wait, be patient. I waited a few days and then took a position. And step one, this is the one. This is the weird, look at this chart. Massive breakout. Share price dropped 15.6% on the day they went ex-dividend. And then the share price dropped the next day 7.4%. Share price went as low as 47 cents. So that is a drop in share price of 17 cents from the day or the day before ex-dividend. So someone was selling at a 17-cent price, that 17 cent at a price 17 cents lower when they received a dividend of 5 cents. So a capital loss or a loss of 12 cents. And then the share price rose the next day 16%. So a lot of volatility in step one just because the company went ex-dividend. And I think a lot of this rise in share price before they went ex-dividend was just these income seekers. They saw the dividend yield and went, wow, I've got to buy this company. And those income seekers sometimes can be really irrational, selling a company 17 cents lower or 12 cents lower than the dividend. That's sort of not the strategy you are going to succeed in long term. Just my opinion. Wagner's another company that's been highly volatile, but still looks really good. A nice pullback in the share price on lowering volume, exactly what you want to see. What else do we have here? That's probably it. Among the companies I do own in my long or short-term portfolio, no companies I'm willing to sell right now at this point in time. Now onto some other interesting charts. And let's start with the XJO, because there was a good day, up 1.29%. Does this mean we're in an uptrend? Nope. Look at that chart. The very definition of not an uptrend. It was a good week, so let's have a look at the weekly chart. So overall, the XJO was up 1.7% after being down 1.7% last week, after being up 2.3% the previous week. So up one week, down the next, up the next week. So it's just going sideways. So the market is unsure right now. The way to look at it is the bears and the bulls are fighting each other, and no one's winning. It's a fairly even match at this point in time. You can see that on the weekly chart, and it's definitely evident on the daily chart as well. There's no trend at all in the XJO. So if you hear anyone saying we're in a bull market right now, just dismiss those people because they have no idea what they're talking about. The Nasdaq, if they did say this is in an uptrend in a bull market, you probably, I would definitely pay that. So the Nasdaq has been in a bear or in an uptrend since about March of this year, and it's still an uptrend. It has been broken, almost broken, but we need to see the highs, the next high, get above the highs we saw in July. Now, I think it's going to struggle at this point in time, but I'm still fairly bullish about the Nasdaq, mostly because of the big companies, the big tech companies who are behemoths, and I think will keep on growing. Now onto some commodities, and let's start off with the beasts at the moment, which is uranium. You have to look at the weekly chart here. But when you look at the weekly chart, the price of uranium has just been in the highs we saw back in April. And this is one of the reasons why a lot of the uranium companies on the ASX have gone absolutely bananas. A company I used to own and I stupidly sold out to take a small profit was Boss Energy. And I sold, this is the weekly chart. So let's have a look at the daily chart. I don't know why I sold. It was a mistake. It was in an uptrend when I sold. There was no reason to sell. And look at the share price. So I sold at about $3 or so. So 50% gain since I sold out. So I can make mistakes. Everyone makes mistakes. It's to learn from the mistakes. And don't dwell on your mistakes. Don't pity yourself. Just learn from it and just know that there's other opportunities out there. So you missed this one. There's other opportunities out there which you should take advantage of if you learn. So that's uranium. Beautiful, beautiful uranium. Just which Australians or we as a nation can take advantage of uranium. But because we're one of the biggest producers of uranium. Anyway, iron ore. Iron ore looks pretty good. So I do own Mount Gibson, my only iron ore holding right now, but this actually looks pretty bullish at the moment. I did sell out of Phoenix, and I'm thinking maybe taking a position again in Phoenix because the share price pulled back because they went ex-dividend, and the dividend was a little bit lower than I think the market expected, but still the dividend yield of that company is about 10%. And if we have rising iron ore prices, the performance of that company should be quite stellar in financial year 24. So since the start of the financial year, which is right there, yeah, the price of iron ore is going up. Oil, another commodity where the price is going up. This is in an uptrend. So if you are holding some oil companies, yeah, it's in an uptrend. There's no reason to sell out of oil companies right now. On the flip side, lithium keeps dropping. So let's have a look at the weekly. Lithium keeps dropping. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 down weeks in a row after a nice little bounce. And the last time the price of lithium was this low was way back in late 2021. So this is the Matterhorn pattern. Matterhorn pattern up the side of the mountain. Everything looks great. You get to the top of the mountain and you can't get any higher. There's only one way, and that's down the side of the Matterhorn. And that's all I've got for commodities. So without doubt, the most bullish commodity right now is uranium, but iron ore looks really good. US oil looks really good. So I haven't looked at, not showing you gold or any of those because they don't look that good. Now on to individual companies. I've got about 20 here, 15 or 20. I can tell you exactly how much I've got. 4, 5, about 16. 15. First one is AMA Group. Almost took a position in this company, not quite, but I wanted to see if the share price of this company could break above this little resistance level at around about 15 cents. It couldn't. Actually, in fact, it got nowhere near. Then the company did a highly dilutive, highly discounted capital raising, and the share price has absolutely tanked. Share price down to 4.4 cents. Massive volume coming in the last 6 trading days. Share price has fallen from 10.5 cents to 4.4 cents because of this capital raising. Sometimes I like to look at companies I've had a look at before. So this was one I was looking at, and I was thinking, oh, maybe this is starting to look interesting, but I wanted to see the share price get above a certain amount, which was 4.5 cents, and it struggled. So sometimes it is good to have a price you're looking at, and if it doesn't hit that price, there's no reason to take a position. This was a perfect example of the strengths of the reasons why having a buying price and why share price breaking out above a resistance level can be good. In fact, for some reason that dash line was too high, because if you go back to June 2022, you can see share price was really struggling getting below 13 cents. And then right now, share price in the last 2 months was really struggling to get above 13 cents. So it wasn't 14 cents or whatever I was talking about earlier. It was actually 13 cents. You can see the share price really struggling to get above that level. 1, 2, 3, 4 days, it got to 14 cents and or 13 cents. It did not get above. And then the company did a capital raising, ridiculous capital raising. Novonix. So share price of this company up 37%. Share price is breaking out. Let's buy Novonix. No, it's not. Share price had fallen significantly leading up to this share price rise. The company did release some sort of announcement. I had a look at the announcement. It's not a reason to get excited about Novonix at all. And the last time share price was this high was the 1st of September. So it took about 2 weeks ago. So it just shows you how much the share price dropped in the last 2 weeks. For the share price to rise 37.96%, and the share price has got back up to those levels. So share price still in a well-defined downtrend. No reason to get excited about Novonix at this point in time. Now on to Neuren Pharmaceuticals. In fact, I'm going to leave that to last because I want to show you the trading in Neuren Pharmaceuticals during today, after closing of trading, because it is exciting. Now onto IPD Group. I've actually mentioned IPD Group did reach an all-time high a few days ago. So someone again asked me, will I sell my shares in this company because of their financial results? And it's sort of a muted outlook from, I'm not sure if muted is the right word, not a bearish outlook, but a wary outlook from management. I don't care about that. I just look at the chart, and the chart is still, share price is still in an uptrend. I'm not taking profits just yet with that company. I'm going to actually have a look. I bought back here. When did I buy? What price? I forget. It was $1.50. I forget what price I bought, but we are at least a 3-bagger for IPD Group. Now on to Duratec. This is a company I was thinking about taking profits in. So I think a director was selling shares. I think that did spook the market. That's why we did see a little bit of sell-off, particularly on Monday and the 8th of September. Let me just verify that. Went ex-dividend today and change of director's notice ×2 on the 8th of September, partial share sale. So this was the reason why the share price dropped on that day, 8th of September, by 5.7%, and the next day by 6%. For some reason, shareholders or investors in Australia panic when directors sell, even though research has shown that's no indication of the future success of a company, particularly in the medium to long term. Maybe in the short term, there is some link, some correlation, just because shareholders tend to panic, investors tend to panic. But in the long term, there is actually no relationship between directors selling and the financial performance of a company. In fact, there's been plenty of examples of directors and founders selling large portions of the shares, and the share price quadruples or even 10 bags over the next year. It happened to Blackmore's when, what was the name of the guy? Is it Maurice Blackmore, something like that? Sold shares to buy a yacht, and then the share price was a 10-bagger. Went from $20 to $200 in about 3 or 4 years. So just don't think because the director is selling that means it's negative for the company in the long term. Now, share price of Duratec is still in an uptrend, and I have put in a price I will sell, and that price is $1.12. The main reason behind that is that's a nice little support level for this company, and the share price did bounce off that level almost twice. When I say almost, share price bounced off about $1.14, so just above $1.12. But share price of this company is still an uptrend. Director selling doesn't mean this company is going bad. Now, price earnings ratio is only 16.6. Nice dividend yield. Anyway, the other thing I should say is I originally took a position in Duratec because of a breakout in the share price down here in November last year. A beautiful breakout, a very definition of breakout. And I bought in around about below 50 cents. So we are talking about nearing a 3-bagger for me. But because I did take a position in this company based off the chart, I should sell based off the chart. But I actually am more willing to hold this company for the longer term. And the main reason or main catalyst behind me selling this company may not be the chart. It may be bad financial news, something like that, like a downgrade, something like that. Superloop, this is a company I am following closely now. The main reason behind that is because share price had been in a downtrend. You can see whenever the share price got into this red zone, which is the longer-term moving average, which is, you can tell it's a longer-term moving average simply because I put the blue line. The blue line is the 150-day moving average or the 150-period moving average. And when the share price of Superloop got in that longer-term moving average ribbon, we did see the share price pull back until recently. So we have started to see a little bit of a shift in sentiment around this company, and it does look potentially like the share price of this company is trying to move into an uptrend. So I have been following this company for a long time, and this is the first time that I have thought about maybe taking a position in this company. and I say just maybe at this point in time. Does look interesting, and this is a sort of signal I am looking for every single time I look at charts. Nuix. So this is so one thing I like to do is when I do sell out of a company, I don't stop following that company. I continue following the company just to learn to see if I sold at the right time and at the wrong time. Now, I sold Nuix at, I forget what price, around about $1.40 or something like that. Was it $1.40 or $1.45, something like that. Because the share price ran up fairly quickly in a few days, but the share price kept on running. There was a bit of a dip in share price, and I was thinking I should take another position in this company at $1.30, and then share price ran up. A lot of volatility in this company, and then we did see the share price pull back a fair bit in 2 trading days during the week, down 6.5% on the Tuesday, and then a further 12% on the Wednesday, and the share price has leveled off the last few trading days at $1.40. So around the price I sold out. I might be willing to take a position in this company again. However, I did have a look at the full year results, whatever it was, and it wasn't the best. I probably would say I probably expected a little bit more from Nuix, and the valuation of the company, 455 million, I think is a little bit stretched for this company. Now, there was a rise in revenue, but the company is still not profitable, and I am a little bit more wary taking positions in companies, even if it's a trading position, in companies that are not profitable. Now to Bravura, another company that I took some profits, and we did see the share price of this company rise 14% today. So I took profits for this company at 70.5 cents because the share price rose 44% in one day, and then I just took profits. I didn't care what was going to happen to the share price. Share price has gone sideways since then, and now a nice little rally in the share price today. So possibly this is the start of an uptrend with Bravura Solutions share price. So keep this in the back of, keep this on your watch list. This is a potential breakout. Mesoblast. And again, I like to look at charts of companies that either I've held in the past and then sold, or the company has seen a significant decrease or increase in share price. So Mesoblast saw a share price drop of 57%. And I just wanted to see how the share price has gone since then. We didn't see any significant bounce. Now, we did see a nice little bounce over 3 days, back on the 22nd, 23rd, and 24th of August, but that was fairly low volume compared to the volume we saw when the share price was dropping. So this is not a good looking chart for Mesoblast. So no reason to take a position in this company. Now to a company I am thinking of adding, an international company or a company listed on an international exchange, an Australian company that I'm thinking of taking a position in, and that is Atlassian. Value of this company is 53.8 billion. Now have a look at the revenue. So revenue has grown from 1.2 billion in 2019 to 3.53 billion in 2023. So revenue has tripled over the last 5 years, but the company is not profitable. In fact, loss-making by $500 million in the last financial year. You'd think, revenue of 3.5 billion, how can you not be profitable? But I'm not buying this company for the financials. Well, actually, probably should, because I would want to hold this company for the longer term. But the chart does look good, starting to look really good. It does look like it is a possible shift in sentiment and a shift in the trend of the share price. And the last time the share price looked like this in terms of sentiment, in terms of trend, was way back. Well, it was an uptrend back in late 2021. Share price got a high of $480. So share price is still down more than 50% from its highs. But if you go back in time, oh, come on. I don't know why TradingView is so slow to react when I'm recording. So you could go all the way back. Gee, you go all the way back to when it listed. All the way back to when it listed. Share price was in an uptrend. Yeah, uptrend, 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 downtrend. So this is the only downtrend this company has seen. false breakout here. So this could be the turnaround for Atlassian in terms of trend and sentiment. Come on. There we go. So actually, this is a nice looking chart right now. Now on to Cirrus Networks. So I did a video on Cirrus Networks in regards to the financial year results. And there is a takeover bid for this company, but it's really interesting. I'll just show you this. Cirrus Networks. So there was a bid on the 11th of September, so on the Monday, and I'm pretty sure the price for this takeover bid was 5.3 cents. And I couldn't understand why the share price was above the takeover bid at 5.3 cents. So share price closed the last 3 days at 5.5 cents, 5.5 cents, 5.6 cents, and then today 5.6 cents. Although, was it in trading hold? Yeah, it was in a trading hold, so there was no trading today. We entered a trading hold 11:22 a.m. yesterday. So what's happened? Well, Atlassian, the company that is wants to take over Cirrus Networks, have revised the takeover bid price from 5.3 cents to 6.3 cents. I have no doubt this 183 million shares at 6.3 cents is Atlassian. You can see big blocks of shares at 5.6 cents and 5.5 cents. So obviously, Atlassian couldn't buy their shares at 5.3 cents because of these massive bids at 5.6 and 5.5. So they've just ramped up their bid price to 6.3 cents. So very interesting. I'm not the biggest fan, to be honest with you, of Cirrus Networks. I might have mentioned that in the video I did. So have a look at that video. Star Entertainment Group. So this was an unsuccessful trade for me. I thought the market might react a little bit better to the news on the 11th of August. This was in regards to New South Wales taxation, whatever it was, in regards to casinos. And it was good news for Star Entertainment Group. Share price rose 18% on that day, but the sentiment was so bad with this company that as soon as share price rose 17.95% in one day, there were so many people who just wanted to unload their shares, and there wasn't enough demand for shares, and the share prices kept on falling. In fact, the share price has fallen from that day, got to $1.22. Now the share price is 85.5 cents. This is an ugly looking chart. Sentiment is so bad in this company. Share price now at a multi-year low. In fact, it might be at a multi-decade low. Let's have a look. Monthly chart. Well, the share price is at an all-time low. So this company started trading in 2011. The lowest after that was around about $2. Briefly fell below $2 during COVID-19 financial panic. So we're talking about 85.5 cents. Now, one of the reasons why there might be people interested in this company right now might be just value, and it's the all-time low. But who knows? The share price could fall or could harm from here. So just wait until sentiment shifts. There's no reason to even think about taking a position in this company yet, in my opinion, because the share price could just keep on falling from here. Qantas. I have a bad feeling that Qantas share price and their financial performance is going to be absolutely terrible over the next 3 or 4 years. I've been doing more reading, listening to more stuff, and what's his name? Alan Joyce did no capital expenditure over the last 5 years, and they're going to have to spend a lot of money to upgrade their fleet. And this, I have heard some people say Alan Joyce was a really good CEO, but I think that has changed now. I think there's going to be opinions come out that he was not a good CEO because he just made sure the performance of Qantas was really good during his reign, but he left some really bad stuff for the incoming CEO. And I think that's one of the reasons why the share price has moved in a downtrend. I'm not bullish on this company at all over the next few years. So I could imagine the share price falling a significant amount from here. Now, I could be wrong, and I'm wrong a lot, but just how it's playing out for Qantas is not good. Now to Syrah Resources. Okay. So I was holding this company, and I loved holding this company because share price went up to $2.70 on the 11th of November, 2022. So I was loving holding this. And then the share price started to turn down. You can see the share price moving in the downtrend in March. So I just wanted to see if this uptrend in the share price, and this was a long-term uptrend going all the way back to the COVID-19 financial panic. And if I saw this uptrend brokered, which it was on the 24th and 25th of April, actually it wouldn't have been the 25th because that's a public holiday, 26th of April. If I saw that uptrend broken, I would sell. I sold about $1.40 or something like that. Share price has kept on falling. Share price has more than halved from my catalyst to sell. So don't be nervous or don't be hesitant to sell out when you get a signal. This was an obvious signal in my opinion, and I sold. The share price has just dropped and dropped and dropped and dropped. Now on to another one, Carsales, where I got a signal to buy and I didn't hit the trigger. I put a bid in and my bid never got met because the share price kept on rising. So Carsales, really good financial report, which was released, I believe, on the 14th of August. Share price rose 7% on the day, and share price has kept on rising. Share price has risen from about $25 to almost $30. So don't be hesitant to buy a company after they have released some really good results, even if the share price has risen 7% in one day, because sometimes the share price can keep on rising. A perfect example of this is GUD. I did take a position in GUD on the back of their results, and the share price has kept on rising. So yeah, don't be hesitant to do that. Now to Neuren Pharmaceuticals. In fact, I would say Neuren Pharmaceuticals is looking, the share price in the chart is looking the weakest it has since I took a position in this company way back in December 2021 when the share price was $3. Share price now $11. This is the weakest it has looked. In fact, it's the weakest it's looked since June 2021. The reason I say that is the share price is just below the longer-term moving average ribbon. So share price is now below 150-day moving average. Share price is now below the 200-day moving average. Share price below all the moving averages. And the shorter-term moving average channel ribbon is now going down and is now entering the longer-term moving average ribbon. Share price closed at $11 today. But look at the volume, massive volume today. So this is the reason why I took a look at Neuren Pharmaceuticals. Why was it so big volume today? So let's have a look at Neuren Pharmaceuticals trading today, course of sales. Okay. So if we go back to the start of trading today, nothing too exciting. So you can go through every single trade. It's a very small trade. Look, there's one share traded that day. Shares traded. How many shares traded? 8.3 million. And there might have been some big trades somewhere in here. But look what happened after trading had ceased for the day. At 4:17 p.m., there was a cross trade. So these conditions here, XT means cross trade. S3 means, I think it means it's a big trade. I might be a little bit wrong on that. And this was a big trade. So at 4:17 and 36 seconds, 3 million shares traded. The value of those shares, 33 million. So a cross trade is just, there's a broker who has both sides of the party he's acting for a broker to both sides of the party. So there's a sell side and a buy side, and both of those parties' broker is a one broker. And so it's a cross trade of shares from one to the other. So that's what a cross trade is. At 4:20 p.m. and 36 seconds, there were 3 other pretty big trades, not quite as big as the one at 4:17, but the total value of these trades was almost about $9 million to $10 million. This was L3 XT. Again, cross trade. L3 means, if I remember correctly, it means late something else. 3 means there's L4, L3, L4, L5. It's just after market has closed, something like that. So some really big trades came in Neuren Pharmaceuticals after the market has closed. I would expect some sort of announcement over the next few days, potentially, in regards to what this is. what these cross trades are. If someone big shareholder has sold out, I don't know who it might be, have no idea. But that's really interesting trading when it comes to Neuren Pharmaceuticals. Probably by volume, no, doesn't quite beat the 7th of December 2021, the day I took position in this company when the share price rose 91%. The making of this company, 7th of December 2021, share price has more than tripled since then. So this is a three-bagger for me, although I have taken profits along the way. So that's it for today's video. Fairly long video again. Portfolio and technical update. I should think about going to bed because I'm working tomorrow, 12-hour shifts. If you have any questions about any companies I've featured in today's video, or any thoughts, maybe I've said something that has raised your ire, angered you, something like that, I'd love to hear from you. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day as I scratch my ear. That's it for this video. Have a good day. See you later. Bye.